If everybody's doing it, do you really want to be as well? In today's video, we take a look at the biggest moves in the markets over the last couple of weeks and why we've suspected that positive gamma and options flow would be pushing higher. Are we about to reach the top? M2 money supply is continuing to go up, and of course, rotation is happening from Wall Street. But what we just saw in the jobs numbers may surprise you. And in today's video, it means there could be new opportunities just around the corner. Well, welcome back, everybody, to what was another sea of green as we saw the passing of the big, beautiful bill, and pretty much now that is set in stone. On top of all of this, we also got the jobs numbers. My name's Tom, and in today's video, we'll be covering off the latest macro, the big data, and of course, the key flows. But let's start with things to do with the jobs numbers because, of course, they look pretty good on the surface, and everybody started to expect maybe less rate cuts. 147,000 jobs were added, and on the surface, it looks pretty good. 110K expected. Unemployment fell, actually, and of course, you might think, wow, this was pretty good, until you look at the private sector growth. 74,000 jobs added from the private sector, and somehow government, 73,000, mostly state and local education jobs. Manufacturing also down 7K for the second straight monthly loss, and labor force participation actually dropped across the board. So what exactly is going on? Well, we always look at the revisions, and usually they've been negative now for like 12 months. You guys know we call it fake jobs numbers because oftentimes they'll come out with a big number, it'll get revised down 30,000, and then it just goes to be exactly what was expected. Well, this time we actually saw a little bit of gains, net 16K in terms of revisions. But again, I would expect a drop in jobs numbers once we see this month's revision. I wouldn't be surprised at all to see that drop. Regardless of all of this, the markets continued their movement up higher. And you know why it is. It's because it is the wall of worry. Recently, we talked about a couple of the big signs for bull markets. One of those is bad news gets bought, not sold, and obviously new highs with lower volatility. Well, we're also seeing a breakout here of one of our favorite reads, and you can see Grant Hawkridge here has made a pretty good chart of the advanced decline line. Have we got an all-time high at all-time highs? The answer is quite simply yes. Is this a good sign? Yes, it generally is considered quite good. It basically shows breadth, and the rest of the market is all picking up. And in recent days, what we've seen is small caps and also medium caps start to come along with some pretty good strength. We also do know that the NAAIM number is starting to approach back to 100, which sometimes can be considered a point of, contention in markets. The last time we saw this, funnily enough, was back in 2024 and the end of 2024. Now, why is this so important? Well, we saw a sell-off here, which was the sell, of course, of semiconductors. And we also saw the sell-off over here, which ended up being realistically more in February. This is an early indicator, but when that NAAIM number ends up coming up above 100, then you want to start saying, well, let's pump the brakes on being an absolute aggressive FOMO kind of person and start saying, well, maybe there is a little bit of risk and potential for a pullback on the horizon. Remember, Q3 notoriously is some form of bear at some point. And the reason is quite simple. July is strong at the first half and kind of weaker at the second half. You can see here the stats for different months of the year and how kind of July actually plays out. And you'll notice that the first kind of bit of time, not bad. Second half, not so good. And then you usually get some form of problem happening between August, September, and October. They are the classic months to see bearish markets. September is basically the worst month of the year if you're looking at it from a pure stat. Some further good news, though, has to do with, of course, some of the gains. The way this market has rallied up really only has two other times. According to Optima's latest data, we've only seen this during the late or 1990s and kind of the early 1980s, 1982 and 1999. Sound familiar? We've talked a lot about this one. Of course, we've been discussing the idea that this boom right now is the AI boom. Of course, what is this boom? It is the beginning of the internet. So are we going into another .com style bubble? We've got the same level of concentration in stocks, which if you're first time here, you may not have seen these charts before. Make sure to subscribe so you get these charts. 37% of the S&P 500 is made up of 10 stocks. That is exactly what happened over here. And we're also getting a very bullish market where nobody now believes that markets can ever sell off again. Now, it's not that they can't sell off 10, 15, 20%. It's people don't believe that any crash will ever occur. And we recently did a survey and asked you guys whether you were, thinking a recession would happen. And less than 50% now believe that. Now, if I took this kind of read only a few months ago, I believe it was about 70% of you thought there was a recession coming. So it just shows you how fast sentiment is shifting in this market. And more importantly, that we have a lot of similarities of the way this is bull bought back up with that 1999 style hysteria. Have a look here at the S&P 500 advanced decline line, 400 and 600, and you'll notice that there is a clear discrepancy here. Everything to do with the top kind of bigger stocks looks pretty good. We're actually seeing an acceleration now of the S&P 400. But when you take a look at the S&P 600, yeah, it's not the same. It doesn't look anywhere near as strong. But even that started to see a breakout. And what that's telling us is that if we do continue to drive higher in the future, there's a decent chance that the small and mid caps may be the next sector to actually break up and around. Some other bullish signals coming. Golden Cross, we've already discussed this. Golden Cross is notoriously one of those signals that most people look for as a kind of bullish sign. Is it that good? Not really. By the time a Golden Cross often does come through, it's actually getting closer to the end. And remember that 1999 read again? Yeah, what did we see at the same period? Of course, a Golden Cross as markets took it out new to all-time highs. The McClellan Summation Index also on the rise. Again, not at that overbought statistic just yet. But we've also got quite a lot of other reads in terms of why we would expect the markets to go up right now. And we did talk about this during the month of June. We thought we would get some form of pullback or pit, which is a pullback in time, where basically markets go sideways for a bit. And then near the end of June, we would see a breakout that really was bought up by mostly institutions. Now, funnily enough, we saw institutions purchasing. Why? They freaked out. They're super behind on the overall buy of this V-shaped rally so far. And we do know that they started to buy tech out of control as this market broke out just, 2 weeks ago. Since then, we've put on like 5% onto the S&P, maybe more. And we're currently squeezing out the shorts as the markets continue to go towards positive gamma. But there is that really important trend line that we had at the start of today's video. A level where we not only have a call wall, which is an options level that basically the market is going to find very difficult to get through, but we've also got one of the best technical analysis reads that we've seen some time on the high end. And one of the reasons that we're thinking this as well has to do with similarities. When you take a look at any of these quick recoveries, these V-shaped, massive gain, very quick markets, third fastest, by the way, in terms of recorded ever in history with this one. So certainly a pretty FOMO-licious type of market. We do tend to see a slowing. And that happens somewhere around that 100 to 125 days of the market kind of finding that V-shaped recovery. Now, where are we right now? Well, we're getting and approaching that 100-day kind of run here from the bottom to the upside. So whenever you get these fast rallies, eventually you're going to generally see some form of dip, and that actually allows Wall Street to continue to buy. Now, what could be the reasoning? Well, there are many things. It could be tariffs. It could be the new earnings season coming up. It could be anything else. And this actually makes sense when we look at all of these seasonal reads. Again, what has the market done since we've even talked about this one? It's on the up. It's starting to hit into those closed trend lines, 6,300, 6,320 zone, some pretty key levels. Now, will we go into chop? Well, this is pretty much what we expected in 2025. If you have 2 damn good years, which we did, we certainly did, 20% plus gains, year 3, it is up, down, and all around. And you may notice that when you approach halfway plus throughout the year, you often do